by becoming rich.
Take all your money and buy Bitcoin.
I say when we
You can
sell.
wake up every morning and say GM.
GM. All right, so we've had a bit of a shift yesterday. So today's monthly preview I'll be dropping soon, later on today, and I'll be digging down into what we're looking at coming ahead for August. But looking at some of the data that came out yesterday and a couple of the moves. So we had a sharp move down in bond yields. So the expectation of this, with yields going lower, is the bond market pricing in rate cuts from the Fed. Because if the Fed cut rates, these 2-year and 10-year yields and all those will go down. And that can be a good thing, because it means the rate cutting cycle starts and the markets should react well to easier monetary conditions. But you also saw a pretty strong sell-off in the S&P, so in stocks, and that has continued overnight. And there now are actually fears about a recession. And this is from the market. There's not really that much talk online about it, but the markets are pricing it in, because yesterday the second manufacturing PMI ISM came in super low. So this is a survey of the manufacturing purchasing managers, so it's the purchasing manager index, and basically it's asking the manufacturing industry how they rate the health of the industry. And above 50 indicates industry expansion, below indicates contraction. So if you look back on the long run, it got up to 50 back in April, and since then it's been sliding back below. 49, 48, 48, and yesterday expectation was 48.8, we got 46.8, so like quite a big miss to the downside. Which shows this article came out yesterday from it. US slowdown fears heighten the odds of Fed rate cuts. So if you remember back a couple weeks ago, I talked about how rate cuts are bullish if we don't have a recession. But some of these leading indicators are signaling towards a recession, potential recession. Now, it's going to be something that's further out, and this can go one of two ways. If you get this slowdown and the Fed start to cut and you avoid a recession, it's very bullish. But if the economy actually goes into a recession, it's not bullish. Recessions are not good for markets. So it's this kind of fine balancing act. And I think the reason why after the Fed didn't cut rates on Wednesday, at the Fed meeting on Wednesday, when they didn't cut rates and we saw the reaction, the negative sell-off into Thursday, it seems like the market is of the opinion that the Fed are moving too slowly and they're actually being too restrictive, which might further cause a recession to happen. Recession's hard to happen. That can only happen from GDP, and we had GDP numbers come out last week. There is no recession yet. The next GDP numbers come in November, right? So it's after the end of the quarter. You have GDP for Q2 comes out in July, and GDP for Q3 comes out in October. So the next GDP print is going to come out in October, which is right before the election. It's unlikely to go negative then. So you're not going to see, there's not going to be a recession before the election. There can't be. You have to have 2 quarters of negative GDP growth. But the markets obviously are forward-looking. And there's plenty of signs now. There's also unemployment claims over here yesterday, which came in higher than expected. And that has been the case. This is a weekly thing, so it's less impactful. But unemployment claims coming in higher, manufacturing PMI coming in lower, signs of the economy really slowing down. If you remember when we did the stream on Wednesday with Powell, he was talking about how the labour market's cooling off, the economy still seems to be okay. They seem to be of the opinion that everything is fine or is moving in the right direction, but the market would be suggesting potentially something different. So we're in a position where you might see a recession scare. And if there's a recession scare, it will drag markets lower. And that will push the Fed to cut. And the bond markets are pricing in 3 Fed cuts this year. We haven't had any. And the next meeting's September, if you see over here, with the Fed was on Wednesday. And the next meeting is in September, right? And then I don't know how many meetings are after that. We have September, we have November, and then I think December, right? December, yeah. So there's only 3 meetings left this year. September, November, December. And the markets are pricing in 3 cuts. So basically that there'll be a cut at each of the meetings. If they end up having to cut sooner or more aggressively because of this recession fear, it's going to be in response to a negative move in the markets. The markets will show it first, both the bond market and the stock market. So far, it's just the usual pull back into summer, pre-election. We've seen this over and over again. But it's definitely interesting. Like, it's definitely worth noting that the market seems to have, and certainly for Bitcoin, the market seems to have assumed that there's not going to be a recession, that we're going to get rate cuts in what they call a normalization cycle. 3 ways that rates can be cut. One is of a panic, like a crash, COVID, etc. Second is normalization, where it's the soft landing, Goldilocks. You don't get a recession, but things cool off, inflation comes down. And the third is from a recession, which is deflationary and not good. If that recession comes, and there's stats of all the previous rate cuts that we've seen, the rate cutting cycles that led to negative moves in the market always come when there's a recession. So it's this weird balancing act, which I'll dive into more on monthly preview, because there's a lot of, the Treasury and the government continue to print. There's a lot of fiscal stimulus. There's $35 trillion of debt, and they keep printing more money, which makes it very, very hard for there to be a recession, because that boosts GDP. But that seems to be the driving narrative of the market. It's not really war fears, because I think that was sort of the accepted reason for the negative moves over the last day or two. I said this a couple of times in the chat and on the stream. Unless it's a literal World War III, there's no reason why any war escalations would be negative for the markets, because you saw this after the October the 7th. You saw it after previous war scares like Russia-Ukraine and a bunch of other ones. They don't tend to negatively affect the market unless it's a major global conflict escalation, which we haven't seen. So looking at that, how would that actually play out? Well, for BTC and for stocks, if there's a genuine recession scare, you will go lower. And then if the Fed if the Fed come out and cut, and they cut more aggressively, and we avoid a recession, that's really bullish. But for that, you need to see economic data not decrease, like not get materially worse in the meantime. And there's actually one big data point coming out today, which is something that we should definitely be keeping an eye on, which is over here. And it's the unemployment rate and non-farm payroll. So 12:30 UTC, right before 1 hour before the New York session, you get non-farm employment and you get unemployment rate. The unemployment rate has been rising. Again, another sign of recession. Unemployment rate was as low as 3.5 last year, 3.4 even. And then it's risen 3.6, 3.8, 3.7, but 3.9, 3.8, 3.9, 4, 4.1. So you can see unemployment rate rising, rising, rising. So if you see a further rise in unemployment, this expectation today is 4.1. If you see 4.2, 4.3, and if you see lower than expected non-farms, so 176, that comes in lower, that's a sign of less jobs. And the unemployment rate rising is a sign again of slowing economy. And a slowing economy is fine as long as it avoids a recession. But because the market is sort of now adapting to a potential for a recession, you could see the opposite. You could actually see things moving in the other direction. So that is mostly, from what I can see, the cause of the the shift yesterday and the negative move and the sell-off, and Bitcoin went down and it took out these lows. And currently, I mentioned last night, you want to watch the 4-hour trend. So Bitcoin is still in a 4-hour uptrend. If you look at the 50, 100, 200, right? So 50 is still above 100, above 200. They're getting close to crossing, but we've seen this before. It can hang out around this level. It can hang out below them. That's fine. What you want to see is now this. You want to see Bitcoin consolidate and get back above that 4-hour trend band and flip those green again, holding the 50, 100, 200, and that would set up a move higher. A lot of this is going to be dictated, I think, today by what happens with this non-farm payroll, because it is 3 weeks until the Fed meet again. It's the 18th of September. Sorry, not 3 weeks, 6 weeks. You've got all of August and then 2 weeks into September. So it's 6 weeks before the Fed meet again. A lot can happen in that time. And if the markets react negatively, it's going to force the Fed's hand more. And if you want to put it like in the simplest sense, all of this year, the markets have been rising, especially like the stock market, because the expectation has actually been that we're going to avoid recession and move into a rate cutting cycle, and it's all going to be good. This is what they call Goldilocks, soft landing. And this is the first time, certainly this year, that there's genuine market fears of that not happening. And so the markets are reacting to that. And that will drag risk assets down, for sure. Now, again, if the recession gets avoided and they thread the needle and they start to reduce rates, everything will be fine. But currently, right now, slowing manufacturing, if the jobs market gets weaker, it seems like the Fed are actually late. Just like they were late to rise rates. Remember in 2021, inflation got way out of control. The Fed didn't start to raise rates until March 2022. Everyone said you were way behind it. You said inflation was transitory. Inflation was not transitory. They were late. And it caused, obviously, massive down moves in the bear market. It seems like they might be late again. They probably should have cut this month, so on Wednesday. And the market will tell them that. The market will price this in, and you'll see prices go lower before that happens. So definitely something to keep an eye on. Definitely going to be a very interesting day, and then the weeks ahead will be informative about what happens next. For BTC, if we're just going back to straight up price action, here we go. So we've been in this consolidation since the middle of July. A couple of attempts to push higher, but they fully retraced. So there's no trend moves here. When it moves all the way up and all the way back, moves all the way up and all the way back and actually goes lower, this clearly isn't trending. It's in a consolidation. And this value area low that we lost yesterday has been retested and not reclaimed overnight. So one area Bitcoin has to get back above is that. It has to get back above that 64.7. Let's just call it 65 will be the first area Bitcoin needs to reclaim. If not, you're looking at potential for BTC to return back towards the lows of yesterday, which is 62.8. And then if it does go lower, you're looking at that value area 61.2 from over here. The one I've drawn out for this whole distribution over the past several weeks. I also had an updated one here where you just draw it across the full thing and you can see confluence here. If you draw this value area all the way across from when we first got above this level to where we are right now, it points it at 61.6. So you've got one of them saying 61.6, one of them saying 61.2. They're roughly the same, right? They're around the same area. And price action from yesterday, we had this really nice reversal hammer candle, which took out the lows, pushed back inside. When you see those not have immediate follow through, so yesterday we did not see price continuing, right, going into today. We actually saw sell off right off the open. That can be a sign of a market that might fully retrace. So it's not happened yet. It's not guaranteed. But when you see those push up, it pushed up, took out some stops, squeezed out shorts. We dropped off, consolidating here. If it drops off and drops off and drops off, that's when you see it going lower. You see these squeezes that fail quite regularly in markets. And if you're looking at it here, you can see examples. Right, here's an example of one. When you get that strong squeeze up and there's no follow through, there's no support, it drops off, and price goes lower, market goes lower. When you see these squeezes as price is pulling back, right, when it takes out new lows and then it has a very sharp squeeze, you can see it again over here, right? You have that sharp squeeze up, but it doesn't hold and it retraces back down. That's a sign that we're going lower. Same thing happened over here, squeezed up but wasn't able to hold. So the market reaction is very telling. What you want to see, be able to find one here, is where you have a sell-off and the market reacts strongly to the upside but then holds, which would indicate the prices are going to go higher. As you can see here, squeezes up, isn't able to hold, goes lower, squeezes up, isn't able to hold, goes lower. That's typical of just a short squeeze. Now, probably have to go back over here to find one where it's working in the opposite direction, where you see a sell-off that gets bought up whenever the market is bullish and holding. And let me see, just to give you an example over here. And squeezes down. Yeah, something like this. This isn't exactly the same, but something like this, where it has the squeeze up, does not reject and go back to the lows, and it holds, and it's an indication that the market's going to go higher or at least build strength. So what you really need to see from BTC is that it comes up into this area and is able to hold that and then flip it. And if that happens, you've got 65.7 and you've got 67k as the levels to watch above. Below us, if it loses 64, you've got 62.8 and you've got 61.5. So Bitcoin has these levels set out. I think today the non-farm payroll and the unemployment rate is going to be all important. And I think today is one of those days you want to watch stock market as well, and also the probably the dollar too, because if there's fears about anything, you'd be expecting the dollar to maybe gain some strength. But the good thing for bulls, dollar seems to still look weak. Dollar seems to still be rolling over. Rate expectations seem to be coming down. So there's every reason why this market should hold and go higher. I think a shock, so a rising unemployment rate or a bad jobs number, which has typically been a good sign, because what does Powell say in his press conferences? If we see the job market weakening, if we see inflation coming down, we're more likely to cut. So when we've seen weaker job prints, rising unemployment, it's actually been good for the market recently. But if it tips too far the other way, where the market starts to fear a recession, that's when you see a negative shock. And that's most visible on stocks right now, as they seem to be pricing in, certainly not pricing in anything bullish just yet. So today's data, 1 hour before the session, is going to be all important. And then we'll see how the market moves throughout the New York session. This is what's on the market's mind today. So if you're wondering why the market seems to be a little bit weaker initially, that's the most probable cause. And how do we look for ETFs yesterday? Inflows, funny, like quite significant outflows across Fidelity, Bitwise, and ARK. But then this new Grayscale mini Bitcoin trust had a big inflow day. So you've actually got technically net positive flows. Ethereum still sitting around that kind of neutral. The bigger outflows seem to have stopped for now, back to neutral. So ETFs aren't, I would say they're not buying, not selling. There's nothing major going on with ETFs over there. And what else? I'll cover way more in depth about the recession fears plus recession, the good and bad outcomes that can come for it. And that's it. So I think summarizing, go back to BTC. Bitcoin with these levels is all important. You want to see it getting back above 64.8, 65, getting back above that area if you're looking for immediate strength. Otherwise, it is rejecting the old value area low. That would lead it to moving down potentially. We are in an early downtrend. It did try to break that structure and hold it, so it has to get back above the area where it broke. Otherwise, you might see some more bearish consolidation, bearish move down, and then towards 61.2. Nothing gets really bad till 61.2 gets lost, where it follows that potential red path. So not major warning signs or flashing signals yet. However, this could be Bitcoin could have been giving us a little hint. You know, we know that Bitcoin has been much weaker than stocks over the past several weeks. And Bitcoin's the more free market, right? There's less manipulation, believe it or not, even though people say of course there's less manipulation. There's no fucking stock buybacks. There's no halting of stocks, and et cetera, et cetera, et cetera. Bitcoin is the true signal for risk assets. And I think that's it. That's it. We'll see how it goes. Don't forget as well, I mean, from that big Bitcoin conference that was all bullish, where we're looking at Saturday and Sunday over there, the markets since then, since Trump spoke, since we had all of that, they're down significantly. So we're certainly not in a phase where BTC is ready for any big massive upside breakouts yet. And it might be because of this. It might be because of these fears that the Fed are moving too slowly. And that's it. GM. A very kind of macro Bitcoin and stock focused day to day, as it should be. I don't think this is going to have a carryover effect into alts yet. I mean, obviously alts are weaker and some of them are seeing more negative moves and pullbacks, as I showed on the altcoin request stream yesterday. But yeah, all eyes will be on Bitcoin for this. Solana is also an indicator here, with it falling back inside of that 172. Solana is still below that, right? So it's accepting inside its previous value area. That's a sign where, you know, if you're looking at Solana to try and build a higher low, this is the place to do it. But remember, below 172 is a negative sign in the short term. So markets have some work to do to get bullish again, and we'll see how that goes. GM.